the new debutant on Dalal Street. We're talking about EPAC. This is a room air conditioner and a small domestic appliance manufacturer, EPAC Durable. The company's issue price was 230. It listed at 221, a 4% discount, so a bit of a tepid debut. And currently, the stock has slipped a little bit more. A quick word about the company. Now, this is an original design manufacturer catering largely to ACs. 80% of the company's revenues comes in from the AC market. The AC industry is growing by 15%. This company has a market share, EPAC Durable, of about 24% in the ODM space for AC manufacturing. They count, 7 out of the large 10 companies as, their big clients. And the company's growth rate has also been pretty good. It's grown at about 44% over the last 3 years. To talk about the way forward, we're now joined by Ajay Singhania, the MD and CEO of the company. Ajay, morning, and thank you very much for joining in, and welcome to the start of your new innings as a listed company. There's one concern which has been raised by the street, is that many of the AC companies are actually manufacturers, the brands, are looking to insource their capacity, the manufacturing capacity, and that could be a bit of a negative for companies like you and some others. How would you respond to that?
Rima, actually, I have some problem in getting the voice.
Okay, so here's what we'll do. We'll try and, fix that for you. But in the meanwhile, just to, some more details about this company. As I said, it's India's second largest AC manufacturer. The AC market itself has been growing by 15%. Amongst the AC manufacturers, you have OEMs, which typically will just manufacture based on the design requirements given by the brand. And then you have ODMs, original design manufacturers, which will help design the AC and then manufacture it. Now, EPAC Durables specializes in being an ODM manufacturer, which means they not only manufacture, but they will also design the AC. They work with 7 out of the large 10 AC brands in India. FY21 to FY23 revenue growth has been 44%. Margins for the company, as you have with these with these manufacturing companies, are on the lower side. So it's close to about 6 to 7%. And the company is raising money. It was a 640 crore issue size, out of which the fresh issue was 400 crore rupees. And there was an offer for sale of, 240 crore, where the promoters partly reduced their stake because they were looking at a one-time liquidity event and maybe, get some money in for other interests. But the company has raised a fresh issue of 400 crore rupees, with which the company will be expanding its capacity quite considerably. But, okay, do we have, okay, Ajay, can you hear me now? This is Rima here.
Yeah, hi. Hi, Rima. Hi, Rima, how are you?
Hi. Good. Congratulations on the listing.
Thank you so much. Thank you so much.
I remember our last conversation, and you were a little shy of giving us a forward-looking picture of the company in terms of the growth guidance, because you were still not listed and there were, SEBI compliance issues, etc. So now tell us, what could be the sustainable growth rate for the company and your view on margins from here on, and how would you respond to one concern on the street is that AC manufacturers are looking to insource their manufacturing, which would be negative for companies like you?
Okay. See, Rima, first of all, thank you so much. I mean, it's a momentous day today that we are getting listed. Now, coming to the three questions you asked me, one on the forward-looking statement. Still, I can't give numbers because we are not allowed to. But what I can definitely tell you is that, one, like I shared earlier, the industry is growing at 12-13%. And as an OEM, ODM, we are destined to outgrow the industry for sure. So, I mean, the kind of growth, if I look based on the Frost & Sullivan number, we are looking at somewhere around 20-21% growth only for AC manufacturers as an OEM, ODM. So, and with, currently 24% market share, the market divided among almost 3 known players, you can understand the kind of growth which will take the industry through if we grow at, double up in the next 5 years. So that's broadly the growth picture. Now, the biggest concern, I understand, we have been hearing it a lot about the companies going outsourcing. So, and I've been repeatedly saying people that, yes, there are few players who have put up incremental capacity. So first thing is they are not getting into manufacturing for the first time. They have always done manufacturing in the past. They already have a plant in India, have put up additional capacities because they also see market growing at a much faster rate, and hence a need for them to put up additional capacities. But in no way those brands who are putting up capacity are competing against us. So their agenda of putting up capacity is not to kill an OEM player like EPAC Durable. It is because they see the market growing at much faster, so they want their share of the pie. But at the same time, we definitely believe they will continue depending on outsourcing partners like us to support them during the peak season.
So just tell us, which are the AC
very important is our focus on the non-AC business.
Yeah. So, hi Ajay, good morning, Surabhi here. Just going back to that, I remember when you were in the studios when we were discussing the issue, you did mention that for the non-AC period, basically the lean period, you were looking to get into coolers and maybe washing machines and a lot of other consumer durable segments as well. So again, that could also de-risk away from if the AC, OEMs decide to manufacture more in-house. Again, to go back to Rima's question, sustainable top-line growth, what do you see going ahead? And also a word on the margin picture. As you bring in these additional products in the mix, how will margins look? Because you're between 6 to 7% right now.
See, so Surabhi here, 7 to 8% margin, the industry average of the listed entities is something which is definitely doable. And as we focus more on improving the asset turn, we see a further improvement in the margins. Because typically what happens is we make money in 6 months and then we bleed in the balance 6 months. So it is more about preserving. So even if we break even in those 6 months, it could add up to to increase the margins by like maybe 2-3 percentage only just by preserving the balance 6 months. So that is the kind of impact air condition has, because 100% utilization 6 months, 20% the balance 6 months, it's a big impact.
No, absolutely. Which is why, in terms of strategy, that
so
makes
hence our focus here is to kind of
Yes, please go on.
There's some problem. Yeah. So I'm saying, so strategically the focus is, if we grow, let's say, surpass the industry growth, we let's say grow at 20-21% in air conditions, we need to grow 40% in the non-air-conditioned business. So that end of the day, we can have equal ratio of the business from air conditioned and non-air conditioned.
So is that the target? So just a quick two-part question. How quickly will you ramp up the non-AC business? If I talk about, let's say, FY25, by March of 2025, 1 year down the line, what will your revenue mix look like between AC and non-AC? And then on that kind of a base, what is the growth rate that you're hoping to clock? Just top-line growth.
So I'm still not allowed to give the numbers for another 3 months, but I can tell you definitely that if currently it is 80-20 AC or non-AC, there's a significant room for improvement, and the focus is extremely high. So whatever investments we have done in last 2.5 years, close to like 350 odd crores, that is all fungible, believe me. And this fungibility is definitely helping us get into customers' wallet, into areas which we never thought existed for us. So we see new doors and new opportunities opening for us as we discussed today, and we see those opportunities definitely opening for us.
Okay.
So there's a significant room for improvement, yes. And
Ajay, getting back to that point about AC companies insourcing their capacity and reducing their dependence on other companies, the manufacturing companies. Which are the AC companies which have decided to increase their own capacity and go do it themselves manufacturing in that way? Which brands, and were they your clients or are they your clients?
Yeah. So Rima, see, currently in India we have close to more than 60 brands, popular brands who sell air conditioners in their own brands, out of which close to 11 brands have their factories. So there are 11 players who already have their own manufacturing. Despite having their manufacturing, most of them have continued to outsource. This is why outsourcing today is almost close to 32 to 35%. Having said that, we all know there are 4 brands for whom the information is there in the public domain who have announced their plan to put up additional capacities. So I want to be very specific. They are not getting into manufacturing for the first time. They are doing an incremental capacity. These are Voltas, Blue Star, Havells and Daikin. So out of this, 3, Daikin, Havells and Blues have already started production, their manufacturing in South, in Sri City. Voltas is still under installation, so probably they should be starting soon, depending on the information in the public domain. So we see these 4 players. All these 4 players together, again as per the information in public domain, they are setting up capacity close to 5 million. All 4 put together, 5 million plus minus something. Whereas market we see is doubling in next 5 years. So today's 8.5 million market will become almost 14 million. So an additional capacity of 5 million is not going to suffice the growth the marketing is looking at. This is what we are trying to say again and again. So the outsourcing percentage is actually going to increase. If currently it is 35, there is a clear-cut indication the outsourcing is going to become at least 40% in the next 5 years. So outsourcing will outgrow the industry growth.
Got it. Just getting back to that point, what does analysis say? What is the AC demand likely to go up by? How many units?
Yeah. So last year, FY23, the AC demand was 8.5 million. It is going to become close to 14 million by 2028. So in next 5 years, it is going to double.
And your expectation is the percentage of outsourcing will go up from the current 35% to 40%?
To 40%, exactly. So current outsourcing was close to 2.5 million. It is going to become some 5.5 million in next 5 years. That's the market report which says that.
Ajay, thank you very much for joining in. It's indeed a momentous day, and congratulations on the listing, and look forward to chatting with you more often. All the very best. We will slip into a break on that note. We'll come back and discuss what's buzzing in commodities. Manisha Gupta joins in next.